Welcome back to the channel. This is the 30th episode of Infinite Dividend Hunter. It's been a strange journey so far, with more downs than ups, but maybe that'll change soon. This week, as always, I'll go over my portfolio updates with you, and I've got a change in the works, so stay tuned. I'm hunting for an infinite stream of dividend income. My plan is to turn $1,000 of Robinhood's money into $1,000 of my money. But you need to do your own research for your investments. This is not financial investing or any other type of advice. Let's get started. So here's the weekly summary from my Robinhood investing screen. The portfolio was essentially flat, down about $8 this week. Most of my high yield ETFs were down this week, and this total is buoyed by my PAAA shares. They keep things steady and represent the vast majority of this account. I have $5.89 of buying power available, more on that later, and I'm still in the low risk margin status, $114 above my $2,000 maintenance requirement. Let's take a look at the dividends I received this week. NVYY paid me almost 37 cents per share, which is a little bit higher than the last couple of weeks, and represents about 104% annualized return. This is the high yield ETF that seems to give me the most bang for my buck each week. As you can see, the weekly totals are generally in the $4 or higher range, whereas all of my other ETFs are less than $2 total for each week. COIW paid me about 23 cents per share for a sad $1.17. And you can see in the totals, NVYY has paid me about $113 so far. COIW has only paid me about $65. Also, regarding this total at the bottom, the $324, I discovered a little error in my formulas last week, and so that number jumped up, I think about maybe $15 or $20, but that doesn't really change anything. The account is still looking pretty bad. This 23-cent dividend from COIW represents about 54% annualized yield. HOOW paid me about 51 cents or 50.5 cents per share this week and only gave me $1.10 total distribution. That represents about a 53% annualized yield. And SNOW only paid me 6.74 cents per share, which is the lowest in that fund's history. This represents about 31% annualized yield. Here's a look at the 5-day graph for my 4 high-yield ETFs, and I've thrown QQQ in there as a reference point. The Qs were down about 0.75%. SNOI was down about 4%. COIW was about flat, barely negative. HOOW was down over 9%, and NVYY was down 1.4%. So overall, not a great week for the portfolio. This poor performance is also reflected in my total return summary spreadsheet. Things are actually a tiny bit better than this because I haven't reinvested some of those dividends, so those couple of dollars are not accounted for here. But you can see the COIW position is down 57%, and the HOOW/former Misty position is down over 61%. SNOY has been slipping recently too, down almost 20.5%. NVYY has stabilized a bit, down about 15%. So my 4 ultra high yield ETFs are down about 38.5% total. And when combined with the profit on my SPY-I position, the portfolio is essentially down 22% when you don't account for the value of PAAA. Going back to the charts, I've switched this over from price return to total return. And let's look at how things stand going back in time some. Here's the 1-month chart. The Qs are up a little bit. NVYY is up 4.27% on the 1-month chart, and the other 3 funds are all down, with HOOW the worst, down 11%. Stretch that out to 6 months. Now we have the Qs up almost 12%. NIVI's doing decent, up about 10.5%. HOOW is up about 1%. KOI is down massively, 47%. SNOI is down a little less than 5%. Again, this is total return looking at the 6-month chart. So when we look at just total return, things aren't too bad, except for COIW, which is just really tanked. The problem is when we compare this to the price return. And we see a very different picture. The Qs are still up 11.5%. SNOI is now down 29%. COIW down 65%. HOOW down 36%. And NVYY down almost 34%. This is an approximation of when I started this experiment. If we go to the 1 month, similar problems. Price return is down significantly. I have a watch list of stocks on Yahoo Finance, and I noticed something disturbing this week about my 4 ultra high yield ETFs. And the information that they display here includes the 52-week range, and it caught my attention that all 4 of these high yield ETFs, and including Misty, which I used to have, are all hovering right here at the bottom of the 52-week range. And it really put into focus for me that this is not sustainable. My portfolio consists of 4 ETFs that are all pushing their 52-week lows during a time when the market, SPY, and the Qs have been pushing higher ever since last April. So what steps am I taking? This week, I suspended reinvestment of all dividends back into these ultra high yield ETFs. I'm continuing to reinvest back into SPY. You can see the numbers in red here are amounts that I have not reinvested. I'll still reinvest the SNOY dividends into SPY. I just haven't done those yet. I feel really good about the SPY position, and I have no issues with it. I'm happy to continue building it out, and I'm thinking about what I want to do with these 4 high-yield ETFs. I want the experiment to continue. I just have to pick different funds, or at least mix up some of these. NVYY has done the best, so I may hold on to it and switch out the others. I've got some ideas, but I'm still kicking them around, and I'm not in a hurry to do anything. I'll probably look to find replacement ETFs that are still high yield, but not ultra high yield like these, because it seems like the yield cannot overcome the NAV erosion in these funds. As we saw earlier, total returns are pretty good, but the NAV continues to fall, which negatively affects the compounding of these dividends. I'm just slowly sinking further and further away from the positive. So like I said, I have some ideas about which funds I may pivot to, but if you have any ideas, feel free to leave them in the comments. I'd appreciate it. And if you found this video entertaining or informative, please hit the like button and subscribe for future videos. And of course, none of this is financial, investing, legal, or tax advice. I'm just inviting you along my journey. And if you'd like to learn more about my small account margin strategy, check out the first 5 videos in the series. Good luck hunting those infinite dividends. Take care.